Hello everyone, Mauricio Blanco here with Keller Williams Real Estate, and today I'm with my favorite mortgage team, the Sergio Guerrero team from Elite Financing Group, and today we want to talk to you about the MCC, or what the MCC credit is, what people know it by. So, Sergio, tell me about what the famous MCC is right now.
The MCC stands for Mortgage Credit Certificate. And the Mortgage Credit Certificate is probably one of the hottest programs on the market right now. It's actually been around since 1994, so it's nothing new. And it is a program where we're going to show you how to get free money back.
Okay, so it's been around since 1994?
Yes.
Okay, cool. And how does that help buyers in today's market?
So what it does is it is a tax credit, not a tax deduction, that you're going to receive every single year you live in the property. There are income and purchase price limits for this, and you need to either be a first-time home buyer or not owned a home for 3 years.
So they receive a tax credit, meaning that they will actually, if you are, let's say, a W-2 employee, that you get money back at the end of the year, you actually will receive that credit back on top of your normal refund.
Correct.
Wow. And if you are self-employed, you will get that as a deduction. Let's say someone owes $5,000, right? And the MCC credit is $2,500.
Correct.
They can take it off from
$2,500
from the balance.
Of the balance.
Wow, that's fantastic. And so who qualifies for this MCC credit?
You have to be either a first-time home buyer or haven't owned a home for 3 years. And the income limits for 1 to 2 people are $110,300 for a family of 1 to 2. And then a family of 3 or more is $126,845.
$126,845. There's a purchase limit?
And there is also a purchase limit is $401,300.
$401,300. Okay, sweet. And tell me about what recapture is. What is recapture?
A recapture is if the money you're pulling out of it, if you're pulling out $3,000 a month from the MCC, they call it the perfect storm for there to be a recapture. A recapture is the 3 things have to happen, and all 3 of these things have to happen for there to be a recapture. Is 1, you'll have to make more than the income that's the limit. 2, the house has to go up in value, and 3, you sell before 8 years. All 3 of those things have to be a recapture. But which is very unlikely, but if there is a recapture, it is just a fraction of what they actually pull out of it.
So just to explain that, recapture is if they have to pay it back.
Correct. Pay a portion of it back.
Pay a portion of it back. Mm-hmm. Okay, and all those 3 things have to be in place, in effect, to recapture to take effect.
Exactly, and the longer you're in the house, the less the recapture is too. So if you sold it on year 7 and all the perfect storm happened, it would be a fraction of what they pulled out of it.
Okay, but it's not likely that.
It's very unlikely.
It's very unlikely.
I have not even seen it happen yet, and I've been specialized in this program since 2006.
Okay, sounds good. And how about VAs? How does MCC work with VAs?
Veterans do not have to be a first-time home buyer. Thank you, veterans, for your service. VA loans are my favorite loans, and on top of that, veterans, you don't have to be a first-time home buyer, and we also use it as income. Well, we haven't got to that part yet about using it for income yet, have we?
Yes, no, we haven't shared that. So tell us about how we can use that for income.
So the way it works for the MCC is there's a formula for it. The formula for the MCC is loan amount times interest rate times 20% divided by 12, and that it will be your MCC credit. And what we do is once we figure out the MCC credit, let's just say it's $3,500, we divide that by 12, and we're going to give that to our buyers as extra income for loan qualifications.
So can you give us a quick example of what that looks like?
Yes. So if you want to do it with me on YouTube, guys, you can just take your calculator and take a $350,000 loan amount, and we're going to times 6.25% interest rate, just using that as a dummy interest rate. And that comes out to $21,875. We're going to times that times 20%. That comes out to $4,375 will be your tax credit every year you live in the property.
Every single year?
Every single year. Every single year. And then what we do as lenders is we divide that by 12, and I'm going to give you an extra $364 a month for qualifications.
Wow. Now, you were telling me before how you took one of your borrowers, one of your clients, and increased her qualification by using this formula, right? By using this strategy. Tell me a little bit more about that.
Exactly. We closed a loan 2 weeks ago. They went to a different lender, won't name that lender. And they approved our client for $300,000. One of our other realtor partners said, hey, talk to Sergio. I think he can get you approved for more. They came to me. I added the MCC. We added some closing costs to buy the interest rate, and I approved the client for $380,000 because of this program.
Wow. I wonder if she was really happy.
She was. She got to buy the house that she wanted. The house that she wanted was $372, and she got qualified for $300 with the other lender, and we got her dream home.
And she's getting that money.
And she's getting that money
for
back.
every single year for
and just to give you a heads up, if it was not for the MCC, I had to explain the MCC to her thoroughly. It took me. I looked at my phone. It was a 29-minute conversation because she was really drilled me about it. And once she understood it. And one thing I do tell you guys is to go talk to your tax preparer. Mm-hmm. That's one of the things I do, so that they will actually, everything that I'm telling you, they'll back it 100%. I was like, why don't you do this? I've explained it to you for 29 minutes. I want you to call your tax preparer, and I want you to, everything that I'm telling you, I want them to, back it up. And she called me back 10 minutes later and said, hey, talk to my accountant. Says the MCC's awesome. Get it. And I'm like, here we are.
Perfect. So someone that that checks all the boxes for the qualification for this type of program, what do they need to do to start? Like, what do they need to say? Or do to say? Do you need to say, Sergio, I want this? Or is that something that is automatically done for them?
For Team Guerrero and all of our realtor partners that we work with, the MCC is part of our business. It's part of our structure. If you qualify for the MCC, we're going to do it. Most lenders, not every lender does offer the MCC program. It is a program that we have to get signed up with the state and take a class and get certified for it. So, and there are some lenders that do offer it and don't think of outside the box to go the extra mile for their clients and don't offer it to them because it does entitle a lot of paperwork on our end. But guys, we're here to do the extra paperwork and go the extra mile and make sure you get free money.
Awesome. And you mentioned classes. Now that brings me to, do they need to take any classes for this?
No, they can take an online course. It takes like 20 minutes online.
Okay.
No big deal.
No cost?
Is there a cost to it?
Sometimes there is.
Sometimes it can be like a $75 cost.
So but it's minor compared to all the benefits that you'll get back from it. Okay. All right. Sounds good. Well, thank you so much, Sergio and Stephanie. And, our goal with these videos is just to bring, all the information of the resources that you have available, especially in today's market when things are very tight. So our goal is for you to take advantage of this. And if you have any questions mortgage related, let them know. And if you have any questions about buying a home or selling a home in today's market, feel free to reach out. Thank you.
Thank you.
Thank you.